Question number 4D. Next question. The price of March Nifty Futures Contract on a particular day was 9170. So the March Futures Contract information is given. The minimum trading lot on Nifty Futures is 50. Lot size is 15. Initial margin is 8% and maintenance margin is 6%. Index closed at the following levels on the next 5 days. So for 5 days the closing prices have been provided to us, and of course these closing prices are provided for the month of March for which the transaction is entered upon. You are required to calculate mark to market cash flows and daily closing balance on account of an investor who has taken long position at 9170, that is at this price, an investor who has taken a short position at 9170. And the second question is net profit or loss on each of the contracts. That is a question. Now friends, over here you can see that the question is providing about the futures price 9170. The question is providing about the lot size, that is 50. However, the number of contracts have not been provided to us. So we can just make an assumption for any number of contracts and we can do answer. So let us make assumption that it is the one futures contract in which the transaction is entered upon, and with that we will do answer of question number 1A. Let us answer the question. Answer of question number 4D. In that, write down assuming that futures contract is entered upon for one contract, comma, answer is calculated. Full stop. In bracket write down, we may assume any other number of contracts also. Full stop. Working note number 1, calculation of maintenance margin. In that, futures contract into 6%, because maintenance margin is 6%. 9170 into 50 into 6%. That comes to 27,510. Next, answer of question number 1A. Heading I am writing long position. In that, working note number 1, calculation of profit or loss on daily basis. First column is date, sale price, purchase price, profit loss. Try to complete it on your own. Let us see, let's say, calculation of the profit or loss on daily basis. We have been provided with the information about the 5 days information. The first is that, so we are doing the long position. So the purchase is 9170 and the sale is 9380. So the first day sale is 9380. Second day the sale is 9520. Third day the sale is 9100. Fourth day sale is at 8960. And last day the sale value is at 9140. Okay. The purchase price for the first date will be 9170. Next date is 9380. Next date is 9520. Next date is 9100. Then it is 8960. This is the way the profit or loss will be calculated on daily basis. So it is 9380 minus 9170, 210 into 50. Into, like we assume that so the one contract is entered upon and lot size is provided over here 50. Dear students, it may happen that so the lot size information not provided, you just have to make an assumption on your own. That is acceptable. Next, 9520 minus 9380. Multiplying with 50 into 1. Students are requested to write down answer along with me. There is a profit of 7000. Next, 9100 minus 9520 into 50 into 1. 9100 minus 9520. So 420 into 50. That comes to loss of 21,000. 8960 minus 9100. Multiplying with 50 into 1. So that comes to 7,000 loss once again. 9140 minus 8960 into 50 into 1. 9140 minus 8960. 180 into 50. That comes to profit of 9,000. Okay, so this is the profit or loss that we have on the daily basis. Next is the margin account. Again, the margin account will have the date, particulars, and amount. Try to complete it. Let us start. We understand that we start with the payment of margin, payment of initial margin precisely. With that, we start. What must be the initial margin, friends? 9170 into 15. Multiply with 8%. Because you can see that the initial margin is 8%. Okay. So we understand that 9170 into 5050 into 8%. That comes to 36680. Now at the end of the day 1, we can see that there is a profit of 10,500. If at all there is a profit, then in that case there is no question of like the payment of margin. So 36680 plus 10,500, that comes to 47,180. Yes, this is day 1 end closing balance. Day 2, there is again a profit of 7,000. Market is going up, so there is a profit of 7,000. So on day closing balance is 54,180. Next, day 3, that is a loss of 21,000. So deducting the loss of 21,000, it comes to 33,180. Now friends, we already have computed the maintenance margin in the very first working note. That is 27,510. And this balance is not lower than 27,510. So there is no payment of the margin. So on 3, there is a closing balance 33,000. Okay. Day 4, there is again a loss of 7,000. Deducting loss of 7,000, that comes to 27,180. So 9170 into 50 into 6%. It is lower than 27,510. So on 4th day, the closing balance before margin call. Why before margin call? Because we understand that say margin is required to be paid at the end of the 4th day. So on the 4th day, payment of margin. Such amount of the margin will be paid so that the closing balance at the end of the 4th day will be equal to the initial margin. What is the amount of the initial margin? The amount of the initial margin is 36680. Okay. So now 36680 minus 26180. 10,500 is the margin which is required to be paid, and it is found as the balancing figure. Fine. Day 5 end. There is profit or loss, there is a profit. So profit is there of an amount of 9,000. So day 5 closing balance, that comes to 45680. The question says that an investor that has taken short position. So answer of 1B, in that heading short position. Friends, now the detailed working note is not required to be prepared. Whatever the answer that we have computed above, reverse of that will be the profit or loss. So working note number 1, calculation of profit or loss on daily basis. So day 1, day 2, day 3, day 4, day 5. Profit or loss, which we already have found over here. The profit of 10,500 will be converted into loss. Profit of 7,000 will be converted into loss. Loss of 21,000 will be converted into profit. Loss of 7,000 will be converted into profit. And profit of 9,000 will be converted into loss. So this is 9,000 loss. In the first case, it is 10,500 profit. 7,000 is the profit. Then 21,000 is this is loss. I'm sorry. This is profit, and this is again profit. That is what we understand. Yeah. Anybody who wants to understand in detail can understand it like this. Day 1, day 2, day 3, day 4, day 5. Listen carefully. Sale price, purchase price, and profit loss. See, the transaction is entered upon by somebody to sell at 9170. So what would be the purchase price? Purchase price will be 9380. Next day purchase price will be 9520. Next day purchase price will be 9100. Next day purchase price will be 8960. And the last day purchase price will be 9140. Okay. Next day what will happen, friends? This will become the sale price. That is 9380. This will become the sale price. 9520. 9100 and 8960. So what will happen, it is 9170 minus 9380. So 210 into 15. So loss of 10,500. So next day what will happen, it is 9380 minus 9520. So loss of 150 into 50, 140 into 50. So loss of 7,000. 9520 minus 9100. So profit of 420 into 50. So profit of 21,000. 9100 minus 8960. 140 into 50. So profit of 7,000. 8960 minus 9140. So 180 into 50. That comes to loss of 9,000. So there will be a profit or loss like this on the daily basis. Once we make the computation of this, the next is the important one, that is the margin account. Everyone is requested to write down answer along with me. I am writing day, particulars, and amount. Again I start with the payment of initial margin. What is the amount of the initial margin which is supposed to be paid? It is an amount of 36680. So here it is 36680. On day 1, so there is a loss. Loss of 10,500. So day 1 the closing balance is 26,180. So this is the closing balance before margin call. Before margin call. We understand, let's say 9170 into 50 into 6%. Maintenance margin is 27,510. This balance is lower than that. So on the first day itself, you are required to make payment of margin. How much margin is required to be paid? So that the closing balance at the end of the first day reaches to 36680. So the difference is of course 10,500. That is required to be computed as balancing figure. That is the payment of the margin on the very first day. Continuing with the further day 2. Okay. There is again a loss of 7,000. But don't worry, this time there is no payment of margin. Why? Because the loss is not of such amount, so the balance reduces below the maintenance margin. So the closing balance that comes to 29,320. Sorry, 29,680. Okay. It is higher than maintenance margin, no problem. On third, there is a profit of 21,000. So it is good. You can withdraw. You are not required to pay margin. So the closing balance 50680, I think. On fourth, again there is a profit of 7,000. So the closing balance is 57680. On fifth, unfortunately there is a loss of an amount of 9,000. On fifth, there is a closing balance of 47, so 48,680. Right on answer. Now friends, the question further says like this, that second part of the question, compute the net profit or loss on each of the contracts. It means that, say, suppose on the last day you square up the contract, then what is the profit or loss? Let us see. Calculation of profit or loss. First of all, for long position, we understand that the profit or loss will be computed like this. Sale price minus purchase price. The price at which you are having a contract to buy is 9170 and the last price is 9140. So logically we understand that the 9170 is the purchase price, 9140 is the sale price, into lot size, that is 50, into number of contracts, that is 1. So what will happen, we understand that the loss of 30 rupees per unit, okay, that is 9140 minus 9170, 30 into 15, 1500 is the loss. That is what we understand that if at all you have a long position. Dear students, this answer you can always cross-verify with the working which I have explained it to you. The working which I have explained it to you is like this. That's the payment of the initial margin is 36680. Okay. Then it is 10,500. These are the two payments. And what you receive is 45680. So we understand like this. What you receive is 45680 minus what you paid initial is 36680 minus 10,500. So what will happen? 45680 minus 36680 minus 10,500. You can see that exactly the amount of loss is 1500. Exactly opposite to that in case of short position. And then the answer for the long position. Friends, the profit or loss answer can be calculated with this plus minus also. If at all you are not having a clarity that say that the difference of the two futures prices is a profit or loss, always you can do like that. Short position, in that again the formula will remain same. It is sale price minus purchase price. On the last day when you square up the contract, this will become your purchase price. You already have sold at 9170. So 9170 minus 9140 into lot size, that is 50, into number of contracts, that is into 1. That comes to, of course, an amount of rupees 1500. This is the way we can do it. Again, you can cross verify the answer. Initially, the margin that you paid is 36680. 36680. Then, again, you have paid margin at the end of the first day, 10,500. And the closing balance is 48680. So, you have received 48680. You paid 36680. You paid 10,500. So 48680 minus 36680 minus 10,500. It comes to exactly 1500. This is the way you are required to write the answer. Now friends, so this is a question which has been asked in the very recent examination of CA Institute. This question was asked in the very recent examination of CA Institute. This is what we have done. And friends, I just want to convey you that all these questions that I have done with you, 4C, 4B, 4A, question 3B, these are the questions that I already had done it, say, and afterwards, say the recent question that say we have done has been asked in examination by institute.